All right, everyone. I hope we're having a good Thursday. Yeah, we just got a bit of a snippet into what we're looking at or what Don's looking at the moment. We'll go through that very shortly. A little bit of news out of UTG. Adam and myself had quite a actually, it was an incredible chat to the creators of Aquitas this morning, Jared and Jason. Really, really nice guys. They've got some incredible plans for Aquitas in the very near future. We can't say too much more, but yeah, in the next month and a bit, they got some stuff to announce from them as well. And some exciting stuff to announce in the next little bit between us and them too. And maybe one thing that I can give you a little bit of a hint is if you have any questions for the boys, get them together in the next little bit in the new year. We might be able to step aside some time to have a chat to them and get them to come in and talk to you guys about the bot and what the future of it all holds. So yeah, very exciting times for Aquitas, and we're really excited to announce some stuff in the new year for you guys as well. Also, just an update as well. The Mindset channel opened up today. If you want to read a bit of a story about me, you can go through and have a little bit of a read of that. I've started filling that with a lot of the stuff that I personally use. Some really incredible books that really changed my life. A really good thing, we went over our trader types in the last few weeks. Well, this is the Myers-Briggs personality type to help you identify your personality type. So I think that might help you as well to identify what type of trader you are and what type of trader you might want to be, depending on what your personality type is. And this was a really big one for me as well. I've actually got the paper right here. I just dug my old one up from a couple of years ago, was from the Braverman test. So that's the Braverman personality type assessment. It's an online test, and it's really only one you can take
Moving
once.
forward, we've got some information here on Coinbase as well, leading into the news for the week. So Coinbase is starting to move and expand on the number of digital assets that it's been listed on its platform, a process that has led to a radical rethinking of how the startup safeguards billions of dollars worth of currency. So to this end, Coinbase moved retail traders' crypto assets worth some $5 billion into its upgraded storage model last week. And according to the company, that migrated included 5% of all Bitcoin, 8% of Ethereum, and 25% of all the Litecoin in circulation, respectively. So Philip Martin, who's Coinbase's head of security, told CoinDesk that the migration process took roughly 4 months to plan. What he stated was this was a fundamentally new architecture from the ground up, he said. He said it all began with the new key generation process in October, through which the Coinbase team goes to a secure location with new computers and prints out keys that are then split up using formats that include scannable QR codes. And he said that we take the private key and apply a cryptographic technique called the Shamir's secret sharing, which is an algorithm that uses to take a piece of private data and split it into a bunch of chunks you can divide, he said. So he mentioned that there's a threshold splitting system because you can define a threshold by less than the total number of pieces that are sufficient to reconstruct the original. So the binder is full of billions of dollars worth of keys are then divided among various secure locations, requiring multiple Coinbase employees to work together over the phone to unlock the crypto. So while many other Bitcoin custodians prefer to rely on multi-signature wallets rather than single key divided into parts, Coinbase devised a strategy to accommodate assets that don't yet work with multi-sig wallets. So Coinbase, again, taking their security and a lot of their stuff very, very seriously. Yeah, $5 billion, you wouldn't want to screw around with that, would you? So again, with Coinbase too as well, Coinbase wants to incentivize the public to learn about crypto by paying them with crypto. So Coinbase announced on Wednesday that it is launching Coinbase Earn, which is a new system where users can earn 0x tokens by completing various educational tasks, including watching videos and taking quizzes. So the platform is an invite only at launch, though anyone can sign up to a waiting list. So if you want to earn some of those 0x tokens, you can jump on to Coinbase and start looking to learn some of that. So it's kind of like almost like getting paid for attention, kind of almost like what BAT is doing with its advertising program, but from an educational perspective. So the educational content is freely accessible, regardless of whether a user is part of the Earn platform or not. And they launched Earn after surveying both customers and non-customers and finding that one of the biggest barriers for people to explore a new digital asset is the lack of knowledge about that asset, which I think is really apt, particularly when it comes to investment in crypto and stocks and commodities. The education element and the knowledge element is one of the biggest deterrents for a lot of people that think it's just simply too complicated. So he mentioned that many of the people they spoke to expressed a strong desire to begin learning about new and different crypto assets beyond Bitcoin, but didn't know where to begin. So the exchange is positioning Earn as the alternate to mining or purchasing cryptocurrencies for users interested in acquiring tokens. So the release that they sent out to the press explained that mining cryptocurrency typically means high setup costs, technical knowledge, while buying crypto requires disposable income to exchange for cryptocurrencies, which limits access. So all of the users need to acquire tokens through the Earn program, is a smartphone or a laptop. So while the platform only allows users to earn 0x a launch, Coinbase said that it does intend to add more content and support for other cryptos in the future. Moving on to OKX. So OKX has, currently, which is the second largest crypto exchange by 24-hour adjusted volume, has launched a new derivative product with no expiry date, meaning that the positions can be held indefinitely. So announced on Tuesday, the product, dubbed a perpetual swap, allows crypto traders to speculate on the future value of OKX's Bitcoin to US dollar index. So each swap contract has a notional value of $100 equivalent in BTC. And the exchange said in a statement that adding that traders can either long a position to profit from an increase in Bitcoin's price or short a position to profit from the decline in Bitcoin's price. So the new product offers up to 100 times leverage compared to the 10 times commonly available in traditional capital markets. So OKX said that it can reduce the trading cost. The settlement time is at 4 o'clock. So that would be 4 a.m. and 4 p.m. daily, while the traded price of a perpetual swap contract is closely anchored to the spot market price. So OKX's perpetual swap also offer a tiered maintenance margin ratio feature, which basically means that it allows the trader to open positions to adjust their leverage according to their risk appetite and market conditions. And at a mark price mechanism to help traders avoid unnecessary liquidations at times of high volatility. So that's quite good. So the exchange plans to add swap between different cryptos in the future as well. So a little bit of a step forward for OKX starting to offer future-like things. That seems to be the hot topic at the moment. So Macron, he's under a bit of fire at the moment. The things that he's doing for the public.
Lee, can you mute your mic, please? Where's ads? Is that? That's all right.
I'll forgive you, Lee. You're a good egg. I like you, mate. You're right. So the lower house of French Parliament has rejected the amendments to the 2019 finance bill, which would ease the crypto-related taxation. French monthly business magazine Capital reported this on Tuesday the 18th. So the amendments that have been declined by the National Assembly referred to a draft of the government finance bill for 2019. And as explained by local crypto news outlet, the Parliament rejected 4 proposals in total. So one of them was introduced a distinction between regular crypto transaction and occasional ones, offering a more relaxed taxation system for the latter. And another amendment proposed to increase the annual volume of transactions that falls under the exemption from £305 to £3,000 or even £5,000. The National Assembly also declined the proposal to follow the current guidelines for securities when introducing crypto taxation. So back in November, Cointelegraph also reported that a reduction in the crypto income tax rate from 36.2 to 30% was also proposed. And that amendment was mentioned during the Assembly's meeting, but it also remains unclear, most likely going to be declined as well. So the head of the French Blockchain Association, Chaintech, Alexandre Chencho, told Capital that the government's move did not provide any legal certainty for the country's crypto traders and investors. So he actually believes that under the current legislation, many of them will prefer not to report their crypto income. So this then sort of creates a secondary flow-on effect, doesn't it? You know, they're cracking down on things, but it's probably going to create more of a problem for them in the future because people just simply won't declare their earnings. So in 2017, Emmanuel Macron said that he would like France to become a startup nation, and the country's minister for the economy and finance, also echoed Macron's point of view, claiming that the country was ready for a blockchain revolution. And I think a few weeks ago, we reported that up to 4,000 tobacconist chains in France were accepting these Bitcoin coupons, where you could go into these particular tobacconists and purchase parts of Bitcoin. So to one degree, they're accepting Bitcoin adoption and blockchain adoption, but to the other degree, they don't seem to want to support the people that are supporting what they want to support, kind of thing, which is kind of ironic. But if they can make more money out of it, they'll slug the people who are the ones doing it. So in December, some of the deputies offered to spend £500 million on a state level blockchain deployment over the next 3 years in order to comply with the course plotted by the French ministry. However, France's overall attitude towards crypto remains ambiguous. The country's central bank has recently refused to endorse a plan that would allow thousands. Oh, there we go. They've refused to endorse a plan that would allow thousands of tobacconist kiosks to sell Bitcoin starting in 2019. So I didn't actually get to that bit. That part where they are going to be releasing the coupons to the tobacconists looks like it's been shut down. So a lot of mixed signals out of France there. It's a complete mess over there at the moment. So another report out as well, only 37% of BTC addresses in its networks are economically relevant, according to a report released by Chain Analysis on the 19th. So to date, the Bitcoin blockchain forms a network of 460 million addresses, which can send and receive Bitcoin. An individual or a ledger entity can have any number of Bitcoin addresses. So economically relevant addresses are controlled by individuals or services who currently own Bitcoin and constitute only 37%, which is 172 million addresses, while only 27 million of these actually hold the cryptocurrency. So they identified that out of the above mentioned 37% of addresses, 86% or 147 million are owned by a name service like an exchange or a darknet market. And as further stated, just 20% of Bitcoin transactions values is an economic transfer. The remaining 80% is purportedly returned as change. So for the period between August and October 2018, around $41 billion worth of transactions were executed, while only $9 billion had real economic value. They also found that just before the market crash in November, the amount of Bitcoin flowing to personal wallets was on the rise. So according to Bloomberg, whether that's reliable or not, by November 1, the amount surpassed 400 million, which was up from less than 300 million in June. So that was, according to them, this was a signal that people were stocking up on Bitcoin at lower prices. So in another recent analysis on the December 17th, back to Dyer again, which we spoke about on Tuesday, found that institutional investors have shifted towards higher liquidity over-the-counter physical Bitcoin markets. So this year, crypto exchange Coinbase saw a 20% increase in BTC trading volume over its OTC markets, while Grayscale's Bitcoin investment saw a 35% drop in volumes compared with the same period in 2017. So the majority of the top 25 Bitcoin trading pairs listed on CoinMarketCap are reportedly basically on grossly inflated false volumes. So the Blockchain Transparency Institute calculated the true volume of those pairs, finding that over 80% of the 25 coins are wash traded, which we mentioned on Tuesday. Looking here at the local markets now, discussing the current state of cryptocurrency market and its forerunner Bitcoin, Dr. Prash Paspananthon, CEO and the founder of Caleb & Brown, which is Australia's largest retail crypto brokerage, reveals that international financial advisors are adding Bitcoin to their own portfolios. So according to him, at least half of his clients or their clients are from abroad, with the majority coming from the US. But he also mentioned that shares in the current state of the regulatory framework is causing advisors to be wary. He mentioned that once cryptocurrencies become recognized financial instrument, once it becomes a financial instrument, the tides will turn. So he said at the moment they're afraid. He said they're scared because there's no consistency in the messaging from the top down. Once we get some consistency and once crypto becomes a regulated financial instrument, which it isn't at the moment, we'll see if financial incumbents being able to invest in it. So that sort of just goes on to what we were mentioning, about next year with the stability and everything coming in. The SEC is now looking to regulate crypto and ICOs a little bit more as a whole. We're going to have BACT coming into it next year, and some major institutional or institutional investors. And I guess that's what he's saying there. They're just looking for a little bit more stability before his clients at least are going to start jumping into the market. And lastly, as well, the Bitcoin halving. We'll just quickly browse over this. So in the months leading up to the last two halving events, we saw Bitcoin's price steadily trend upwards and then power higher following the reward halving. The blockchain's head of research, Gary Kellerman, said in May. The situation could meanwhile change much sooner than May 2nd, 2020, which is the next halving. As others noted, to still with the incoming debut of various cryptocurrency products geared to Wall Street, and institutional investors had the potential to diversify the number of Bitcoin users and the corresponding spread of Bitcoins among them. So obviously, like I just mentioned a minute ago, the backed platform, although it's been delayed, should begin offering physically delivered Bitcoin futures on January 24, apparently. So despite mixed messages, backed executives have recently also hinted at a partnership with Starbucks, which will expand the opportunities for retail investors to use Bitcoin for point-of-sale transactions. And here's a little bit of the info from for the next halving. So May 2nd, 2020 is the next halving, and it's alleged that when that happens, we're going to see things go boom. Or a lot of people are sort of saying that, or have said that in the past. I was going to say something about Eric Finman, who's his Bitcoin millionaire, but he shits me. It's really not worth it. he shits me. All right, guys. So that's it. Despite that one person that had those wonderful things to say about my mindset channel, jump over there and have a little bit of a look. I really hope it helps you to inspire. Perhaps you could have a little bit of a read as well, whoever said that.
No, it was Peter's missus. It's all good. We sorted that out.
You might become inspired as well. So good on you. All right, back to you, Don.
Too easy. Sorry, just quickly doing a couple of trades. Just 2 seconds.
So how is everyone's trades going this week while we've got Donnie sussing out his trades? Been a lot of chat inside the channels in the last week or so. Lots of support from you guys as well, sort of encouraging and helping one another out, which is really, really awesome to see too. Anyone jump in to Bitcoin? I regrettably sold at about 366, I think is when I jumped out. I was saying to Don before, I got scared. I went the opposite direction. I wasn't looking to FOMO. I was looking to exit because I just didn't see that as a sustainable push, and this has kind of caught me off guard. Paul, you're in a bloody short. Paul, you're our indicator, Paul. You know that. So if you're in a short, I need to be in a long, mate, don't I?
Yeah, that's it, mate. If I'm in a short, jump on those longs. You know she's going to hit 4 or 5K if I'm in a short.
You must have put a fair bit on to get this big green candle happening.
Yes, mate, I did. I've had, I was going well. I had 5 from 5, and I'm getting a bit confident. But I'm still in. I've got my. I don't think I'm out. I'll hang in there.
Yeah. Well, look. I don't know how high it's going to go, but I'm pretty sure it's going to come back down. Put it that way.
Yeah. Yeah,
it's just a matter of how high it goes before it comes back down.
I was going to say I'm 52. I mightn't see the next drop.
Well, Ben has said that he's forgotten how to long.
Yeah. I'm stuck in bear mode as well, so I've got to get out of it. Especially this last impulse move we've had over the last couple of days. It's thrown me off a bit. Like I was able to chart it, but I didn't have my head screwed into longing. I was looking for the short opportunities instead of looking for the long opportunities. So I just rode the longs up and then went to short. I've got to get out of that because there was some really good long opportunities there and I just didn't even think about it.
That's it. Look, I'm colourblind when it comes to green.
That explains a lot.
Nah, look, when was the last? Sorry, bro, what was that?
I was long.
You were long? Good on you, man.
Yeah, bro.
Shut up, Adam.
Yeah, fuck off there, Adam. Just think, guys, when was the last time you saw a big green candle like this? You know, is it going to be sustainable? Probably not. Like, you know, we've had some big green candles in the past that have, you know, just rolled over. I'm still a bit iffy whether this is going to be a sustainable move or not. We will definitely have a sell-off afterwards. We always have a sell-off afterwards. So if you are still in a short, you know, you probably got in at the wrong time, but I still think we're going to come back down. We'll most likely have an ABC correction after this.
He's going to miss this lifestyle so much.
Right. So we'll just have a quick look at Bitcoin first, and I will dive into a little bit on Elliott waves and Fibonacci now, even though we're going to jump into Fibonacci, sort of start from scratch in just a minute. But first off, I'll just show you quickly how I got these levels. It's easier to see on the 1 hour than it is on the 4 hour because it just shows a little bit more of what's going on. Get it to a nice level. All right, so I'll get rid of these so we don't see them. Right, so after the first push that we have here, this first leg of money, that gives you an indication of a trend that's now forming. So we've got an uptrend. After the first initial uptrend, we always have a sell-off or a pullback. What we want to look for, so if you don't catch this first leg of money here, you're looking for the pullback for an entry. And using Fibonacci retracement tool, you have your possible targets for entry. 38, 50, and the 61 is the ideal entry positions. You know, it can be either. It's not always going to be the 50. It's not always going to be the 61, but it's generally going to be one of these three. Once you've got the confirmation of one of these fib levels creating support, and there's going to be another leg of money, then we can start using the trend-based Fibonacci tool to find possible targets to reach, which will then plot our Elliott waves. So trend-based fib extension tool, which you'll find over here. It is this one here that says trend-based fib extension. For those of you who don't have it in your favorites, it's pretty handy to use. Once you get your head around Fibonacci and finding fib targets, it's really handy. So to find our targets and to plot our Elliott waves, you go from the first leg of money to the swing high to the swing low, right? And then I just bring it across so that you can sort of plot your chart. The second impulse move, all right, so there's your first high. I'll just put a line there so we can see our first high. All right, that's now resistance. Okay, so that's our resistance line now. That was the previous high, so we're going for a double top. We didn't break it, we tried again. Once we break it, you get an impulse move. Now, the reason you get an impulse move is this is where a bunch of short traders have their stop losses. So people who were short off here have their stop loss just above. So once we break through, once you trigger those stops, you get an impulse move because there's not a lot of support, not a lot of resistance after that. So that's the impulse move you get once you break that level of the first wave. You get the impulse move. The second target is the 1272. Okay, we did breach over a little bit, but that's our next target. The retrace on that should only be around 38. Okay. So if we go from our target of 1272, I know it's a bit hard to see, but using the Fibonacci retracement on this second leg of money, the retracement should be to the 38. Technically it shouldn't go to the 50. It should just go to the 38. Okay. So I'll start plotting our correction now. Our Elliott waves. So first leg of money, our retrace, second leg of money to the 1272. Second retrace, which lines up with the 786, but if you use the fib retracement tool just on this leg, that's actually the 38, but it lines up with the 786, so I just use the 786. And then the third leg goes to the 168. So that's how you plot your Elliott waves. And that's the correct way to plot it using proper fig targets. Once you get the correction generally comes back down to the D leg, or the second retracement, goes up to C and then back down to B. All right, and that also forms your head and shoulders. And as I was saying to Paul before, the head and shoulders is going to be a little bit more relevant when it's using a level of support, like a horizontal level of support rather than skewed trend line. So yeah, that's how you use fib targets to find Elliott waves. So when you see people drawing Elliott waves and they're all, just random, like this, that's, oh, sorry, let me get rid of all this shit. God. when you see people drawing Elliott waves like this, you know, that's not valid at all. That's not Elliott waves. Elliott waves has a set of rules to follow, and if it's not following the rules, then it's not really Elliott waves. It's just a movement. So yeah, just wanted to throw that in there anyway. But as you can see, using the plotted Fibonacci levels that I used, we actually have a perfect Elliott wave setup. So what comes after the Elliott waves? ABC correction. So that's quite possibly the next move in Bitcoin after this rejection. And it just so happens to be on a level of supply as well. Does everyone see that and get it? Yeah. Arlene, the ABC correction levels are generally the retracement back down to the D leg, back up to the C impulse, and then slowly back down. So the psychology for those who, excuse me, weren't in from the start of the chat before, the way retracement traders trade, they generally trade this C leg of money here. They might go for the E as well, but it's generally not as profitable going for the E leg. I think I had the E leg down about here, somewhere 4,000. The reason retracement traders trade the C leg is because they need something to give them an entry to begin with. So this gives them their entry. So that first leg of money pricks their ears up and go, hey, there's an uptrend forming. Let's wait for the retracement, and that's going to be our trade. So this is going to be the retracement trader's trade. And when I say retracement traders, I'm talking about proper institutional traders, like professionals, not retailers. But then again, if that's your trading strategy, then that's what you would trade as well. So once a retracement trader notices a leg of money in an uptrend, they are then using their Fibonacci tool to find possible entries. So they might stagger their buys. They might wait for candle confirmation for the support, and then they'll take their entry, and that will be their target, the 1.272, and that will pretty much be their trade. They could possibly try and scalp the next retracement up, but quite often that last leg isn't very sustainable because most of the traders in here who pushed it up have taken profit. The institutional traders who are trading the retracement have taken profit. And then this is generally a bit of a sucker's rally. So this is the people who are a little bit late to the party and start buying. But if there's any traders, any smart traders who are in from here or here, and the price is still going up, they're taking profit here. Okay, so once they take profit here, that's generally a harsh sell-off. So this sell-off here will most likely be harsher than, say, these ones here, where they're a bit more of a gentle retracement. That'll be quite a harsh sell-off. This will be another sucker's rally where people are still buying. It'll form the head and shoulders. Most people will see the head and shoulders and go, yep, this is fucked. And you'll get a slow, steady sell-off. Is that making a bit more sense to it, knowing the psychology of it? So what did I say there? Peter, what was that? So D and A can be wherever. No, so D and A. So your D wave here, D retracement is generally 38% retracement of that C leg. So it's generally here. Sometimes it can be a very short retracement, like 23. So really that D leg should have been somewhere around here, but it retraced a little bit further down to here. So I just drew it down there. And that's how you find the D leg. Where's the fucking chat thing gone again? Arlene, yeah, you can, but you don't really know. Like you've got fib targets to short too, but you don't really know where it's going to stop, if that makes sense. So if you had in mind already where the C leg was going to finish, you could open up a short here, but you don't know if your short is only going to be 23, 38, 50, 61, because if it drops down to 61 on that second pull and you create either if the second retracement is lower or the same as the first leg, well, then the Elliott waves technically shouldn't play out, and that could actually be a reversal and come down further. But it's hard to tell. So you could short this second wave. You just don't know where it's going to be. So let's say it's only going to be a 23% retracement on that leg. You got to factor in your risk to reward on that move, because if it retraces quickly, you just don't know. But you definitely can short it. It's just more so you don't know how far it's going to go. You can short the E. So you can short the start of the ABC correction, and you can short the B. But yeah, it's not recommended to short the A and the C, because you just don't know where they're going to retrace to. There's a good chance that if this plays out, the ABC correction is going to be quite a good short. Yeah. Is there much difference? Ideally, it's on the 4 hour. I just go on the 1 hour because you can see more candles. So on the 4 hour, I'll get rid of all this shit. On the 4 hour, because it is quite parabolic, you can't see as much. So I'm still technically charting it on the 4 hour, but I'm just zooming in just so I can show you more candles. Because there's a whole heap of noise in between that, I've seen people draw Elliott waves on lesser. So essentially what you could do is, generally speaking, Elliott waves just keep zooming out. So you could possibly even find Elliott waves within this as well. But I doubt it will follow the same rules. Could quite possibly, but let's just see. So that's technically another one there. But if we use trend-based fib extension, let's see if it actually follows the rules. No, so it doesn't. So it didn't actually follow the correct rules of Elliott waves. So yes, it did a 5-wave push and it did a 3-wave correction, but that's, it's not as predictable. So you technically wouldn't really have been trading that. You would have been trading here to there. Scalpers might have been. Yeah, cool. All right. So I'll just do a quick market update anyway before we jump into it. There is a little bit to cover with Fibonacci. As we just went over, what I'm seeing on Bitcoin at the moment is most likely a correction incoming after this decent bullish move we've had over the last few days. Most bearish traders, or people who are trading in this bear market, are looking to take small profits. They're not really looking to get too greedy, because these things aren't sustainable in a bear market. And technically, we're still in a bear market. So I highly doubt this is going to be much more of a sustainable move. We should see a sell-off soon. So that's what I'm seeing in Bitcoin. Most of the other alts will follow suit, most likely. Something that I always keep note of as well is looking at the short and the long charts. At the moment, shorts are still pretty much all-time high. So the all-time high level was previously here. Every time we've got up there, we've had a squeeze to drop us back down. We've even busted up to a newer high recently, and we still haven't really managed to be dropped back down. However, longs have taken a massive dive, as probably most long traders were taking profit around C leg, I believe. So yeah, after that second impulse, so as I said before, most institutional investors are going to trade this leg here. Most of them have closed their their longs now. Hence, there's not a lot of longs in the book anymore. So I dare say what we've seen, that's the institutional leg here has taken profit, and this is retail investors. But I'm really surprised about that big green candle, but we'll see how that plays out. I did post a few alts the other day that I jumped into and made a few good trades on. That looks like it's coming back down to this really strong supply that we've had multiple touches on before. Looks a bit messy with that on there. So I'm possibly looking to enter this again, but a little bit iffy, because we do only generally get a few touches within these channels before we get a decision. We tried to break through supply previously, wasn't sustainable, and now we come back down again. So I'll keep an eye on this. looking for an entry here on demand, but if it doesn't hold and it looks a bit iffy, then I'll probably be getting out. But looking at some of the indicators, it looks pretty good. There is a bullish divergence here as well, like this. Oops, drew that on the wrong one. So we do have a bit of a divergence showing, so oversold on the RSI, and we're coming back down to this demand block. So there could be a nice entry here. And the reason I like this channel, it's 20-odd% or nearly 20%, but it moves quite rapidly. As you can see, every time we bounced off that demand, it's been a pretty quick move. So keeping an eye on that one. My only concern is if we have a harsh sell-off on Bitcoin, I think a lot of these alts might find not necessarily new lows, but they might drop back to previous lows. Neo was another one that we've been keeping an eye on. I know it doesn't look that impressive, but we did do like a 10% or something on that the other day. Yeah, nearly 10%. Again, this is sort of creeping back down to these levels, so I'm looking for new entries back down here, just depending on what Bitcoin's going to do. If it's going to have a really harsh sell-off and find a lower low than it has, and we drop down to 3,000, then I reckon a lot of these alts are going to try and find new lows as well. ONT's been a beauty for us. Whoop, get rid of that shit. We had a couple of good trades on this, but as you can see, so if we're going to plot Elliott waves on this guy, we can see it's failed. So let's go on the 1 hour to give us a little bit more detail. So what we'd do using the trend-based fib tool, we would find the retracement, plot our graph. We nearly hit the 127. Actually, if I bring that down a bit, yeah, pretty close to the 127. But our second retracement should have bounced off the 786 and it's failed. So that's pretty much invalidated the Elliott wave. So people who are waiting for that fifth wave or fifth leg to push this up, it probably isn't coming. You could almost see a failed attempt here at possibly something like that. But it's that skewed that it's just noise, really. It's not validated. Oops. So yeah, we're out of this at the moment, but that was a good 20% trade, I believe. We got a nice low entry. Oh, it was a bit more, 30%. Can't remember now. So that was a good one, but it looks a bit average at the moment. I think on Ichimoku, we had a couple of buy signals, but then it's flipped on us and gave us a sell signal. Where are we? Oh, there we go. So we had a really strong, I'm on the 1 hour. All right, so we had a really strong buy signal originally when we popped out of the clouds here. We had a nice bullish predictive cloud and the lag line popped out. It was looking really good. And then it's turned straight back down and we've crossed over and it's pretty much given us a sell signal. So we're out of that for now and we'll see what happens. It could have another pump in it, but it's not really going to be very predictable. Skycoin was another one we had some good success with. I think that did about 38% as well. So I've got something brewing on this. Get rid of it. What did we do? Yeah, 42% we got on that. That was our buy and sell. This is on our Unity sort of index fund that we're running at the moment. I'm sort of managing a fund for the boys at the moment, and yeah, we got a nice 40% trade off this guy. It still hasn't really given us a sell signal, but it's just looking a bit average at the moment. So it's hard to say if this is going to play out, but it's worth keeping an eye on because it is still above the clouds at the moment, which, you know, it's technically in a bullish area or bullish zone. So worth having a look at if we'd start to get some candle formations that are giving us another buy signal. But for now, we're out. ZRX didn't really do too well, but that was another one we got into. Yeah, it was up and down, up and down. Yeah, a couple of small trades on this guy, but it's pretty much in a no trade zone, really. We were just looking for some cheeky buys down low. But, not much there. I won't go into too much more in the market right now. We're going to jump into the Fibonacci talk, and then we're going to go over some other charts and show you guys how we can use Fibonacci to our benefits. So Ty has whipped this sucker up for us. I haven't really gone over the whole thing, so I'm just sort of reading it as I go, but I've got most of this stuff down anyway. So Fibonacci retracement and extensions. Retracements, what are Fibonacci retracements? The benefits of trading retracements, when they or why they occur, and what Fibonacci retracement extension levels are. We'll dive into it now. So for those who don't know what Fibonacci is, I'm sure most of you guys would have, considered most of you guys were originally Spartan members. So famous mathematician, Italian mathematician, discovered a simple series of numbers that created a ratio describing a natural proportion of things in the universe. The ratios arise from the following numbers: 0, 1, 1, 2, 3, 5, 8. Basically, you add the previous number on. So 1 plus 2 equals 3, 2 plus 3 equals 5, 3 plus 5 equals 8, 5 plus 8 equals 13, and so on and so on and so on. Series of numbers is derived by starting with 0, following by a 1, and adding, as I just said. These ratio is called the golden mean. The numbers the US traders want to be aware of. So these are the most common retracement figures that we use, which is the 23.6, the 32.
Excuse me, should be 8. My apologies.
Yeah, 38.2, 50, 61.8, and the 76.4. So they're like the most common values that we use. So they're the ones that sort of prick up in our mind all the time. Retracements are short-term price corrections during an over larger downtrend or uptrend. These price corrections are temporary. Sorry, these price corrections are temporary.
And price reverse. Sorry, guys. Yeah. I had to whip this up quick today. My apologies.
I'm thinking, am I really tired, or is this just the way it's written? Reversals do not indicate a change in direction over a larger trend. Finding and trading retracements is a method of technical analysis using short-term trades. The main benefit of trading retracements is they provide an opportunity to profit by entering a trade in the original direction of the trend at a better price. So this goes back to the form of retracement trading is people who got in early and are lucky, they're sweet and they're taking profit. But the people who come in a little bit later, you might have been notified that there's a trend brewing. So now you're looking for an entry. You don't want to buy the top and hopefully it keeps going up. You're looking for the best possible opportunity to buy. And that's why you'll look for that pullback or the retracement to get the next leg of money for this trend to continue. And the Fibonacci levels give you an idea of where your entries may be. Why do they occur? They occur when a significant number of traders start to buy as they believe the market price will increase, which pushes the market higher. And as more traders notice this movement, they start buying as well. So you get that first leg of movement as people, believe it's going to go up. When this movement gains traction, some traders will close their position to take profit, which is, generally, it could just be a level of resistance or something like that. There may be EMA that it's hitting, that it could just be a psychological number, like an even number, 4,000 or something like that. And that's generally the first leg of money that comes in. And now people are looking for their option to buy because, me, you, and everyone else missed this. So now we're like, I want a piece of that. Where's my spot to buy? So you're looking for the retracement. When the movement has gained traction, some traders will close their position and take profit. And this results in a temporary sell-off and the market will pull back and the upwards momentum will suspend. So we stop the upward momentum. We have a pullback. After this original force that is formed of the trend resumes their activity and the price continues to rise until the trend has run its course and or reverses, often hitting the next level of resistance. So if it wasn't pulling in Elliott waves, it may have hit a really big line of resistance, and that's why it sort of pulled back after that. So basically the Fibonacci retracement is just giving you an option to buy that trend without buying it at the top. How would you enter a trade in a retracement? First, find a strong upwards momentum. So here's your upwards momentum. So there's a trend that's being started and you want to get in on this trend, but you don't know where to buy it. To find an entry position, look to enter the market in the direction of the trend right after the pullback has occurred. Put simply, buy pullbacks in an uptrend and sell rallies in a downtrend. But how do we know when the market will pull back? This is where fib retracements come in. In order to apply fib retracement levels, you need to identify a swing high and a swing low points. So you need to identify a bottom and a top. So somewhere where we've found support, somewhere where we've found resistance. Now we're looking for our retracement. Until we identify a low and a high, you can't use your fib retracement tool because you've got no idea where it's going to, where to draw the top of your fib line. Using the fib retracement tool in TradingView, we draw the fib from the swing low to the swing high in any given time period that we are trading. So again, it just depends on the style of trading you're doing. If you're scalping, you might be on the 15 minutes and it's all still relative. Just the moves aren't going to be anywhere near as big and you're probably going to have to react a lot faster. Whereas say swing trading on the 4 hour or the 1 hour, you've got a lot more time to react and the moves are probably going to be a little bit more significant, a bigger, higher percentage swing. The horizontal lines are the fib levels, and the most popular levels are the 38, the 50, and the 61. Now, this is worth mentioning as well. The 50% retracement level is not an actual fib level. So 50 isn't actually in the golden ratio at all, but it's more of a psychological or significant number. One, it is between these two here, but it's just sort of a psychological number that halfway, a halfway pullback. In an uptrend, the price will retrace down a certain percentage of the move before continuing its long upward movement. Likewise, in a downtrend, the price will move up a certain percent before continuing back down. So you can use fib retracements on a downtrend as well, indicating a short-term rally that you may want to jump in and long, or just jump in for a short scalp before, or it can give you, once you have picked a rally, you can find where it may possibly stop, where you can maybe open up a new short. If the price moves beyond the 50% level, it might be a signal that the trend reversal is about to happen, and it may be an opportune moment to swing the direction of your trade. So yeah, if it 50%, I would say more so once it cracks the 61, that's a good indication that there could be a reversal. So when you see, say, if this leg here I think that bounced on the 50 or whatever it was, if it had have gone to the 61 and then dropped a little bit lower, it technically would have just blown out any uptrend. So an uptrend generally won't pull back any further than the 61. If it drops below the 61, then that's a sign of that uptrend not being sustainable, and it most likely will retrace or reverse, I should say. Any trader that relies on technical analysis will see most moves retracement around the fib level and the specific around the 50% levels. How to use the fib retracement tool. So if your coin you're watching retraces and breaks through the 38%, the next area of support, or where you'd be watching an entry, will be the 50% level to seek confirmation that it is beginning a trend back upwards. Now, if it doesn't hold the 50, then you're looking at the 61. So you can be a bit more of a scalper and just set your buys. So once you notice bigger money and it starts to retrace, you can run your Fibonacci up and you can put buys on the 38, you can put buys on the 50, you can put buys on the 61 and average in. Or you could just stick your buy on the 38 and have a stop loss just below it, but it's probably not going to be worth the risk because you'll most likely get stopped out. The other thing to do is to wait for confirmation. So you want to see, you'll be looking for candle formations here. Wow. So if I run fibs up from here, just roughly. So let's just say, for example, you were buying off the 23. If you had to put an order here with a stop loss just below, you would have been stopped out. Whereas if you may not have even put buys on the 38, you might have just been waiting for confirmation. So you've gone, okay, big wick to the downside, and then you've got a bull hammer, and then the next candle open bullish. That might have been your entry. So, if you're waiting for confirmation, you're going to use candle formations to find the confirmation that you've found support. And that's where you found support. So you got wick to the downside, a bullish hammer, a bullish engulfing, next candle open bullish as well, you're in. That just repeats the same thing. How to use the fib retracement tool in an uptrend. And this pretty much just goes over what I just said. So notice how we bounced off that major support level at 50 and waited for the next candle to close for confirmation. So rather than just sticking your buys there, you're going to wait for confirmation that that's your buy signal. This gives us signals to enter the market as the direction of the trend has reversed. We don't always get a nice, easy trend like that to follow, although it would be very, very nice. Crypto never gives us a trend like that. So how to use Fibonacci retracements in a downtrend. Likewise, in a downtrend, you can place your entry after the price has found resistance at the 50% fib level, and after you wait for confirmation that the price is going to move back to its original downtrend, and then you can place your order for short. So you can either, if you find a level of, in a short, you find a level of support here, you then run your fibs down to find where this rally could find resistance, which was there, and then you look to open your short again on the next confirmation that that resistance has been respected. How to place your exits. Your exit strategy is comprised of two steps. One is deciding where you want to place your stop loss, and two is where you place your target profit. So if you're entering off the fifth, so if you've seen this confirmation of a reversal or a bounce off the 50% and you've jumped in, your stop loss will be just below the 50% fib level. Because if we turns to shit and it comes back down and stops you out, it's probably because we're going to the 61. Well, that's up to you to decide whether or not your risk to reward is really worth it. If you're going for a 30% push and that's only a 1% stop loss, well, then you'd probably give it a little bit more room below the 61. I generally go below the 61 because there's every bit of chance that we're going to retrace to the 61.8. But if we drop far below the 61, we're probably going to come back down. In an upwards trend, place your stop loss just slightly below the major fib support level. This allows for a little bit of movement on the other side of the candles or the wicks down past. So you do get stop hunters. You do get people just doing weird shit in crypto. You get weird wicks and stuff. So you don't want to place it too close. I know a lot of people used to place stop losses on support, and it was like the worst thing to do. Give it some breathing space, because just because that is a level of support doesn't mean it's going to be perfectly respected and you're going to get wicks touch it and bounce off. You can every time get a wick that comes just below it. It happens. In a downtrend, place your stop loss just above retracement level. So yeah, just flip this on its head if it was upside down. If you're going for a short, your stop loss will be just above the retracement. Fib extensions. Now, I don't know if this will go into the same strategy I use, but it's virtually using the same thing to find potential targets using fib levels. Fib extensions are used in Fibonacci retracement, which is a common method of technical analysis used to forecast potential areas of resistance and support in the market. Retracements is based on the concept that the stock or the coin will retrace to a predictable portion of a move. Typically, a retracement occurs on the three standard Fibonacci levels, which is 38, 50, and 61. Fibonacci extension can be calculated when the stock retraces more than 100% of its prior move. For example, to set a price target on a breakout of an ascending triangle, traders typically use the 61.8% level. Multiplying the vertical distance of the triangle by the key Fibonacci ratio and adding the result to the triangle's upper resistance level can yield the target price. This is something I haven't done before. So they're saying I didn't really get to 100% retrace. So interesting. The most effective way to calculate Fibonacci extension is when a stock are at a new high or a new low, and when there are no clear levels of resistance or support on the chart. If a trader is long on a coin and the new high is beginning to occur, we can find Fib extension levels to form an idea of where the stock is likely to fall or where it's likely to make profits. So yeah, so generally when, like back in December and stuff like that, when coins were finding new highs, it's almost impossible to try and find where they're going to find resistance because there's no market data to tell us where we might find resistance. Try and bring up an example of that. Let's just go back because we were looking at it just before. Is that a fresh high there? No. We need to try and find something that we don't have market data for before it ever got there. I reckon that's it there. All right, so before this high even ever started, let's go back. Let's do some replays. I don't know if we're going to be able to get that high using a fib extension, but you can. So let's just draw one here and then go to settings. All right, if you chuck on your higher levels, why aren't they coming up? Sorry. Oh, it is there. Just can't see it. I'll just leave that one there then. Couldn't see it before. So just to give you an idea of what they're trying to say is when there's no market data to know when there is or where there's going to be resistance, because as we're here, we're making new highs. If you're still in the trade, like where are you taking profit? You don't know where your take profit levels are. So just to give you an idea, here's possibly, this is just really rough, but here's possibly a bunch of targets that you could find resistance when there hasn't been any market data to show yet. Let's just see if these levels are respected at all. I know this is just a real random drawing, but we'll just see how it plays out. I'll speed it up. Right. You see that? Right there, we got a wick touching that. Respected that's actually the 1.27 extension. We got another wick touch here, so it's respecting that fib level. Let's see how we go. Look at that. Yeah, did go a little bit higher, but you can see how these levels are respected. It's pretty crazy how Fibonacci works and how you can just find targets and stuff using fibs. It's pretty full on. So even though we didn't even know what was going to happen because there'd been no market data, using a form of Fibonacci and using extensions, we can generally find possible areas that we could hit if this trend continues. But you don't know if that trend's going to continue because we've never been there before. But that's essentially what they're talking about. Consideration for extensions. Fibonacci extensions are not meant to be a sole determinant of whether to buy or sell. We suggest for traders to use these extensions along with several different indicators of patterns when looking to determine one or multiple price targets. So it's not a rule set in stone to say that's where you should sell. It's more so this could be an area of interest, if that makes sense, that it could possibly find something. But you'd be obviously using other indicators or other trading strategies to determine that as well, possibly just RSI or something like that. Fibonacci extensions can be used for any time frame, no matter how long or short, whether used for a chart that spans a month or one that spans in a day or a minute. Fibonacci extensions are a proven methodology that are most effective when applied in instances of price waves. So as to increase accuracy when forecasting the likelihood of future price waves, typically clusters of Fibonacci levels indicate a price area that will be significant for the coin and traders in their decision making. So they're always going to be valid because it's just something that's widely used, not only in technical analysis, but I think it's kind of wide into our brain, I believe, if anyone wants to chime in. It's one of those things that are just a freak of nature, and it just so happens to be a lot of people's habits respect these values as well. What I wanted to do was dive into some charts and do some simulated trading and get you guys to jump in and see if we can put some of these things in practice to find where we might possibly put some buys and sells. So one I've got here is the USD Japan or yen. Now, what we got to identify, as we mentioned before, you've got to identify a swing low and a swing high. So right now we've got a swing high and a swing low. All right, so I won't do that because it's big and thick. So there's our swing high. There's our swing low. Everyone see that? Everyone good?
Yeah, we good.
Yeah, man.
Right. Okay. So first off, we've seen a level of resistance, and this upwards trend is starting to retrace. So the first thing we do is we use our Fibonacci retracement tool and we find possible entries. Now, where are we sticking our entries, boys and girls? Where are we sticking them? Tell me. Arlene, 38, 50, 61. Craig says the 61. Yep. So essentially this whole box here is our entry, but let's be a little bit more specific. We're gonna look at the 38 and see if we get a buy signal. If we don't get a buy signal, we're looking at the 50. If we don't get a buy signal there, we're looking for the 61. This is probably going to be the most profitable area to buy in, is the 50 and the 61. Most of the time, the first retracement is going to be to the 50 and the 61, not the 38. 38, if it retraces off the 38, that's more of a FOMO buy, so the price actually become quite unpredictable. So the 50 and the 61 is going to be our golden pocket to get a buy. And then once we've located our next retracement, then we can use our trend-based extension and try and find possible targets to set up Elliott waves. So we're going to play and see if we get a hit. First of all, where's our stop loss? So let's say our buy is bang in the middle. And our stop loss is, give it some room. It's not a whole lot of loss. So mind you, we're on 4x at the moment. So we're 500 times. So, just to give you guys an idea. So that's what, 50%, something like that. All right. That's our trade at the moment. But once we've got confirmation that we have reversed, then we're going to use our trend-based extension and try and set up our potential trade. So I'll play this through and see how we go. Are we going to get a buy? Maybe not. So there's a 38, but we didn't get a buy signal on 38. Oh, we got a touch on the 61 and we've reversed. Okay. So we didn't really get a buy signal on the 38. We touched it. We wicked below. I'll zoom in. You can't see shit. So we wicked below. Next candle was a bit of just a spinning top. Another indecision spinning top. Another indecision spinning top. Each one of these candles wick below. So we still haven't really got a solid buy signal. And this is on the 1 hour as well. Next candle closed below. 38 is not going to be a target. Our 50 is our next target. So you might have set some buys on the 50 and then down to the 61. So now we've got our retracement. We're in this trade and we've got our stop loss set. Now we're going to set our trend-based extension and try and find where we're going or where we would like it to go. So this is the potential setup for Elliott waves. All right, so there's our swing high. Here's our retracement. So where's our target? Where are we going? That's it.
Yep.
All right, so we're going to go up to here, down to here. Then we're going to go up to here. Then where are we going? Anybody? I can't see the chat, so you're going to have to say it.
786.
786. Then where?
Looking for a bounce.
168.
168. That's our ideal trade setup. Depending on the type of trader you are, you might sit in it and go for the C leg. You might try and shoot for the E leg. You know, go for that whole thing. You might go for the C and then try and rebuy on the D. Either way, you've got a potential setup that you can see, that you've said that I think this is going to happen. Let's see how it plays out. All right. Now, play and see if this walks the line at all and see if we hit any targets. You can see how these fib levels are being respected though, bouncing around between these two. Nearly. Not quite. Close enough though. We'll call that a hit. Oh, just about. There we go. We got a hit. Are we going to get a hit up there? I may have drawn a little bit skew-if. There we go. Hit and fall back. All right, so I'll go back here a bit. So these may be a little bit off, but we did get a hit here. Now, if I draw fibs off this push to here, where did we retrace? Off the 23. We were aiming for the 38 because the 38 is the most potential buy, but we can retrace off the 23. The next target is the 168. Can everyone see that?
Yep.
Getting it?
Yep.
Sweet. So yeah, the first, we'll do a full lesson on Elliott waves and study all the rules, but just to give you a quick idea, the first rule for Elliott waves, the first retracement is generally around the 50 and the 60. The second retracement is around the 23 to the 38. And your first target is the 1.272 and the final target is a 1.68. So yeah, this could be there or it could be there. So you might have set buys. If you didn't want to stay in this trade, you might have set buys here or waited for candle confirmation, which would have been this big bullish engulfing here. And then you may have entered. But either way, that was still a successful one, right? So if you stayed in for your final target, you did it 500 and something percent, 550 odd percent. Not bad for one single trade. Now, following the Elliott wave, you have an ABC correction. And as I mentioned, the first drop is normally pretty harsh. So that's, I'll just do it like this. So the reason that first drop's pretty harsh is because people who have already been in this trade for that long, they're not looking to stay in it. They're out by now. So that sell-off's generally quite harsh as we hit that final target. And then that's our setup for our next drop. So we'll see how that plays out. And as you can see, this forms, I know it's a little bit skew-if, but that more or less forms our head and shoulders like that. It may not come all the way back down here, but we'll see. There's our another hit. It is taking a while. Oh, there we go. It's coming down. And we nearly hit our final target. Oh, there we go. Hit our final target. All right. Now, just looking at these fib levels that I've plotted here, you can see how many times they have been hit and respected. You know, these levels here act as support and resistance, support and resistance, support and resistance, support and resistance, support and resistance. These fib levels just act as those hidden support and resistance lines throughout the whole chart that you wouldn't even really normally see. Yeah, see how it goes here. All right. Is it still respecting those fib levels? Somewhat. Ooh, lower again. You can see even that lower drop we had then. Oh no, that was the original leg of money that kicked off. You can see how that was respected as well. All right, move on to another one. XLM. Give it a go. Same deal. We've started to see an uptrend. We'll just let it form and then we'll do our retracement and see if we can find an entry. Probably should run CCI or Stotch to find our swing highs and swing lows. So a bit hard on this one. So that could be or is it this guy? Whoops. A little bit of noise there. I'll just let it play and see what happens. Maybe it was that then. So we're looking at, when I say we're looking at swing highs and swing lows, that's our low. So they're right there. And that's our high, which is up here. All right, next low or the retracement back down here. So you can see here, right on that golden pocket again. Perfect buys. All right, now we fuck this off. And let's do our trend-based extension to that swing high, to that low. All right, now we can plot our Elliott waves and see if we're going to have a play out. So to the 127, back to the 786, up to the 1618. Now remember, this one here, this retracement doesn't always bounce here. It could bounce here as well. It'll bounce in one of these two. So we'll just we'll put it down there because we know it's going to be somewhere around there. Bang. Double top. There's our buy. This for the next leg. And okay, here we go. Not bad. So even though the figures might be off by a couple of sats or whatever, you can see how it followed pretty much the right direction that we were looking at, and it hit our targets. I actually even respected the 2, which is basically double the original leg of money. So yeah, interesting. Has anyone ever used the fib-based, the trend-based extension tool before? No. Do you like it? Will you start using it? Yeah, it is really cool. I love it. It's great for finding potential targets, because sometimes you just don't know. They don't always play out. Like Elliott waves doesn't always play out. And like I said, generally if it drops below the 61 on the retracement on the first leg of money, it's probably not going to work. Even if it does start to keep going up, if it goes all skew-if, you don't really have your targets because it's not following the Fibonacci retracement, or it's not following the trend-based Fibonacci extension. So it's not really going to give you your targets. But if you plot it correctly and it follows the first 2 rules, which is, retracement back to the 61, you signal for a push to the next target, which is the 1.272, well, then it tells you that there's proper traders playing this game and you're probably going to get the right play out. Again, it will happen on more high liquidity coins where there is actual institutional investors, not just dumb money buying shit coins. It doesn't happen all the time, but you can do this exact same move in a downtrend as well. I probably should have tried to find a downtrend to chart. This is all pretty sideways. Let's have a look. All right, here's a perfect example why you can't, if it doesn't follow the rules, it's not going to work. So let's go. I'll put this here so we can't see that. Uh-oh. Go back again. I'll put that there. And this will be an example of where it breaks the rules and doesn't work. Okay, so we've seen a bullish move here. And we found a swing low and a swing high. So we've done our retracement and we've got a buy off the 61. Okay, so now we're going to plot our trend-based extension. Just a roughie, something like that. So this is our rough. This is the rough idea of what we believe is going to happen. All right, but if we break any of these rules, it's probably not going to happen. So that throws your trade plan out the window. So at the moment, your trade plan is to buy here and sell here, possibly buy here and sell here. That's your trade plan. If for any reason it breaks any of these rules, well, then your trade plan's out the window. Move on. It's not going to stick to your plan. So let's play it because we know this one doesn't work. Oh, that was way too fast. Let's go. Well, you can see here, we hit resistance on this fib level, dropped below and made a lower low. So we dropped below that, that last retracement. So it's pretty much gone out the window. You would walk away from this trade now because it's not going to play out the way you want it. You could almost go like this because it did kind of almost hit. But again, that throws Elliott waves right out the window because that ain't Elliott waves. All right, the reason that ain't Elliott waves, because it broke the first rule. First rule is no more than a 61.8 retracement. And that's 78.6 retracement. So that already says that Elliott waves isn't going to work on this. All right. It also says if you did draw it on this, all right, we still hit, so using that pullback of the 786, we did still hit that target of the 1.272, but the second retracement should have only been up here. So we broke another rule, right? Because it retraced all the way down here. So you can't do an educated trade plan off something that's broken the rules of Elliott waves, even though people will look at this and go, see, look, it was perfect Elliott waves. Look, 1, 2, 3. It's like, yeah, but that's not how it works. So you would have failed because it broke the first rule. So if it doesn't stick to the rules, as soon as it breaks the rules of Elliott waves, then it's not valid anymore. It's just doing something. It could do 5 pushes, 1, 2, 3, 4, whatever, but it's not really Elliott waves. So don't trade it like it is. But yeah, as I was saying before, you can use the exact same rules in a downtrend. I just need to find a downtrend to bloody do it in. Here we go. Let's do it here. So we've got a swing high and a swing low. So we could probably go something like this. All right, we've got a touch on the 50. So we're going to draw our fib extension from here to there. And then that's going to be our entry for a short position. So we're going to go from here to here. And what's our target? 1.272. Look at that. Ain't that some shit? However, invalidated because we punched through the 786. So we either needed to retrace here or here, but we didn't. So I broke the rules of the Elliott waves. So Elliott waves can still go down. So you would have been out of this, and even though it would have been spectacular to catch that whole leg down, it wouldn't have been a very educated guess because technically it broke the rules. So you would have gone, you would have entered off your retrace here. Sorry, back here. You would have run that short down to the 1.272. And then as soon as you would have closed that position and maybe looked for another short here. But as soon as it went up, you were stopped out if you didn't already jump in. And you wouldn't have bothered trading that because that was too unpredictable of a move. However, some people still would have gone, see, Elliott waves. It's not fucking Elliott waves. They broke the rules. Does everyone get that now? How many people have seen people draw Elliott waves just completely not sticking to any of those rules that I've shown?
Heaps of people on Facebook.
Yeah, just about everyone draws Elliott waves, but does not stick to any of the rules at all. They're pretty much just drawing Elliott waves on anything. Anytime there's a move, oh, Elliott waves. Doesn't work. Arlene, we don't, but I have been compiling something for Elliott waves. I've still got to do some infographics and stuff like that, but I've got a big write-up on it, but I want to cover it probably in Jan when we start our next month. Because Elliott waves, I reckon we could probably do a full week on, because Elliott waves, I only just covered the real basics of it. I'll give you the proper drawings and everything for it so you can work out how to do it yourself. But also ABC corrections and Wyckoff patterns and things like that. So there's a lot more to Elliott waves. So we'll go into that. But the main thing I wanted to teach about Elliott waves tonight is the fact that it respects Fibonacci levels, because tonight's topic's really about Fibonacci. I didn't really need to go into the basics of Fibonacci because I'm sure most of you guys already know what Fibonacci is. There we go. We got it ready. So I didn't really need to talk about Fibonacci itself as much, but I know not many people use fib extensions to find targets. I know everyone uses fib retracements to find possible entries, but no one uses fib extensions to find targets to hit. And you can even just draw targets like this as well. So when you just draw your fib retracement and you're buying off the 38 or the 50, you've still got targets in mind here. They will be respected. So here you've got your previous structure. We busted through that. Your next is the 2.7 on your extension. And we've respected that. Pretty much blew through that. So you can just use that as well, but that's not going to give you, so I'll just leave that on there, but then I'll draw the proper extension tool. You can see how the lines don't line with everything, but they're pretty close. So it generally will be respected. But how many people actually use Fibonacci on almost everything when they trade anyway? Because you can. Yeah, fibs are cool. Fibs are really cool. Yeah. Yep. Ads is a big fib man.
Oh, love it.
Fib ads uses more fibs for targets. So do I. I always want to know where things are going, not so much where I want to buy at, because it's no good using a retracement tool on where you're going to buy at when you've got no fucking idea where it's going to go. That's where you don't have a trade plan. So if you aren't using extensions and finding targets to hit, or you might be using a level of resistance or something to hit, which is fair enough, then you've got a target in mind. But if you don't have any targets in mind, well, you don't have a trade plan. You're just buying something because you think it's going to go up. It's going to go up to where? It's going to go 2%, 10%, 50%. Where's it going to go? You got no idea until you actually give it some target. Yeah, cool. That's about all I really need to go over with fibs tonight. I will try and get something down for you guys so that I've got a bit of a cheat sheet for you for doing trend-based extensions. And yeah, then we'll go into Elliott waves next year about all that stuff. So there was still one more thing we wanted to go over this year, which was candlestick formations. We will dive into it a little bit when we can find time throughout the Christmas, New Year breaky thing. But that's also another big lesson. So candle formations in terms of single candles, 3 candlesticks together to form another formation, things like that, but also patterns. So pennants, double tops. Some people, I don't know, I don't see a lot of people use them. I'm not going to go into them too much right now, but Does anybody ever use cipher patterns? Does anyone ever use ciphers at all? I can't bring up the chat. It's always a pain in the ass. No, yeah. There's a lot more to it. So we're going to go into candlestick formations and candlestick patterns as well. We'll sort of try and chuck that into the one thing. So I reckon we could almost run a whole week and a half or 2 weeks on candlesticks, candlestick formations, and candlestick patterns, as well as dive into Elliott waves and Wyckoff. That's almost a whole month, I reckon. There's a fair bit to learn there to get your head around and understand and chart. So, yeah, that's about it from me. It is Thursday. Ty, are we going to be doing some stuff?
It's up to the people, but if you went into that mindset channel that I created today, I did leave you with some of the stuff that I use. So the audio that we used for our mindset stuff is called HoloSync. It was created by a guy called Bill Harris from Centerpoint. I have created a direct link to that if you would like to download it and perhaps try it on your own time. And you can go through and listen to that HoloSync recording that I have playing in the background when we do our mindset stuff. So if we want to do it here now, we totally can. If not, you have the option to go and download it direct and give that a shot yourself if you'd like.
What's everyone want to do? Let's do it. Peter wants to do it. This looks like it's going to fail. I'm pretty sure everyone's keen, Ty.
All right, well, we can definitely do that. Just give me 1 second to get the audio. Paul, that's enough out of you, mate.
Get a bloody hammer onto it. Don't just poke it down.
Actually, I think I've got a hammer. Hang on. I think we've got a hammer here somewhere.
Just draw it on and share it to every bastard so they think it's going down.
I'm pretty sure we've got a hammer. Where is it? There it is.
Yes, that's it. Well done.
Boom. Boom.
Bloody fancy putting in a short. Oh, my God.
Who would play the short game?
Oh, mate. We're in a bear market.
You're good, bro.
Arlene, yeah, it's a couple of people that have asked that question as well. Well, obviously next Tuesday is Christmas. And then we kind of assume that next Thursday, which was the 27th, people would be away. Is that going to be the case? Or we just kind of thought that everyone would want to just sort of kick back a little bit and get themselves adjusted for a big New Year's, I'm sure. But we can maybe reassess as we get a little bit closer. We're assuming that most people will be kind of busy at that period. Tuesday's obviously a no-go. Arlene, when are you coming over here to Oz? And you're coming over to Perth, aren't you? Is that right? Perth? Yeah. Hopefully you'll be able to maybe catch up with Kaz at some point, Arlene. Oh, niece's bodybuilding con. Wow. Good for her.
Jesus. Oh, that's a totally different chart. Don't mind me. I'm looking at something else.
So for just quickly before we dive into this thing here, I think we've only got 2 or 3 people out of everyone that's here or in our group that won't be on for next month. I'll release a little bit more info in the coming days for those people who might want to jump on for next month. But for the majority of you guys, you're locked in for another 2 months at least at this.
Locked in.
So you're stuck with us. So we definitely go. This is the beginning of some of the more advanced stuff that we'll be offering in the coming months. We've gone through the basics and the essential stuff, but obviously jumping into waves and Wyckoff and some more advanced candlestick formations and patterns is starting to get a little bit more advanced for you guys too. So yeah, really start seeing some growth in the next couple of months. And next month as well. Sorry, not next month, but next year. Let's say, for example, we would do like a get together. Just want to put some feelers out there. We're in Melbourne, but is there particular months or weeks or days that are off limits for people? Maybe we'll get a bit of a calendar. I'll get a calendar together and we can all sort of put our availabilities and when we might like to potentially catch up and do something.
Yeah, keen.
Just we've got a few ideas, but we've got to see what works with everyone. Cool. All right, Don. So for you guys, if you want to participate in this, Arlene, don't know about getting to Melbourne. Yeah, it's all right. We'll forgive you for that one. But yeah, if you guys who want to get into this mindset thing, we'll run it for about 6-7 minutes today. I run for myself. For those who don't believe in it, that's fine. But for myself, I run through 3 different scenarios. I do my perfect day scenario, I do my perfect moment scenario, and then I do my sort of 3 key area scenario. And this is particularly leading up towards the end of the year. Like I said to you a couple of weeks ago, now is a really good time to do that 80-20 analysis of the things that you want to double down on next year that make you happy and add value and bring positivity to your life, and eliminating the shit that doesn't make you happy or that doesn't bring joy and fulfillment to what you're doing. So a lot of people will bring, that we want to get fit for the new year, but I'm going to start on the 1st of January. I'm going to start on the Monday or whatever it is. You really should be building that momentum now to then lead on to next year. And that 80-20 analysis, which I'll put into the mindset channel for you guys tomorrow, is a really, really key way of doing it. I actually went back through some of my old boxes and I found shit from like 4 years ago where I was writing all this sort of stuff down. And it's really interesting to look back at those times and see how much you've grown and where you've sort of come from. And if you read that story in the mindset channel, for myself particularly, it's interesting looking back on those times and where I am now. It makes you incredibly grateful for what you have and how far you've come. All right, so I'm going to share my screen. And we'll go through this second bit here. Oh, oops, sorry. I'll just have to cut this. So get yourself comfortable. If you've got headphones or earphones, pop them in. Get the room nice and comfortable. We're going to be closing our eyes and just doing one last visualization technique for the year. We'll just kick it off briefly and just let me know if that's loud enough for you guys.
I don't think you've shared sound, bro.
I haven't shared sound?
Oh, yeah, no, you have now. I can hear it now.
Donnie, what are you doing to me?
Wasn't there before.
All right, is that too loud, too quiet? Can you hear me enough?
That's good, bro.
Cool. All right, guys. So get yourself comfortable. Get into a nice, comfortable position. This is our last visualization technique for the year. So really embrace this. We want 2019 to be the biggest and best year for all of us, not only from a financial or a trade standpoint, but relationships, spiritual, mental. You've really got to put this stuff into action if you want it to work. I think I'm a testament to that, and as is Don and Ads. All right, guys, so we're going to kick off. We've got to close our eyes, and I want you to get really clear on a vision. And I want you to take a really deep breath in through your nose and let it out through your nose as well. The whole time, you're going to be in through the nose And exhale through the nose as well. Make sure that everything's removed from your body. Continue breathing slowly in through your nose and out through your nose. Just a normal breathing pattern, but in and out through the nose. And what I like to do every 20-30 seconds, take a big inhale. Just a nice long exhale and just release all that tension. If you've had a bad day, that's all right. You've had a bad week, had a bad year, that's fine too. We're exhaling all that negative bullshit. We're prepping ourselves for a really big 2019. I just want you to imagine you're sinking into that really big warm blanket. It's a cold night. It's a rainy day outside. Sinking into that bed, that blanket, super comfortable. And I want you to visualize your life and what your life looks like in 3 key areas. I want you to visualize firstly, think about your health. Breathing deeply in and out through your nose with your eyes closed. Really have a think about your ideal health. Now, the only thing that really matters to a lot of people when they're facing disease or pain is getting past that barrier and getting better again. You know, money means nothing to us when we can't fix sickness. You know, so without good health, everything else comes second. And I want you to visualize your health right now. You know, what are you putting into your body? Is the rest that you give your body at night enough? Are you strong? Are you fit? Or have you let things slip a little bit? I want you to reflect on where you are with your health and where you imagine your ideal health. The way that you want to feel, the way that you want to look, and the types of activities that you're going to need to adopt to support that vision. I want you to imagine that you're standing in front of a mirror and you're looking at yourself with this ideal health staring right back at you. Really imagine and look at yourself in this mirror and see what's possible for yourself. Feel it, see it, breathe it in. This is going to be you next year. But what does that look like and what are you going to have to do to get to that point? And hold that image really strong in your mind. Take a deep breath in through the nose, out through your nose, holding on to that image of health. And hold that vision. And secondly, I want you to visualize and see the most important people in your life. Who are those people? What person? Important people in your life. I want you to imagine them standing in front of you right now, all staring, looking directly at you. Your friends, your family, children, wife, parents. How are all these relationships in your life between your parents, your children, and loved ones? Are you present in those relationships? Are you committed to those people? Do you stand up for them or do you put them down? Do you judge them or do you build them up? Are you there to support them? Do you talk negatively behind their back, or are you the person you want to be in that relationship? Or some of the relationships that we have falling behind and we wish they were a little bit stronger. Now there might be one person or a group of people in your life that are standing right in front of you right now, staring right back at you. And this person is someone that you really wish you had a better relationship with. Maybe it's someone that you had a falling out with. Or someone that you had a bit of an argument with, you can see standing in front of you right now. That most important relationship to you, even if it isn't someone you had a falling out with. I just want you to imagine hugging that person and holding that person and releasing all that tension between the both of you and nurturing that relationship. Because without these friendships and these relationships, life really is very little. Just removing all that tension, you're nurturing that relationship. Next year, you're going to have the best friendship and family relationship you've ever had in your life before. Just breathe that in through the nose and out through the nose. As we move on to the third final phase, we're focusing on our financial wealth. Without creating financial results in our lives, it does hold us back in a lot of ways, doesn't it? It makes us feel unworthy at times. It can make us feel scarce, puts us in a place where we're uncomfortable. Our finance and our wealth, and creating better relationships with it serves us in a lot of ways. Our health and our relationships included. You know, and where you are right now, the experience that you have with money, you visualize and look at your bank account in your mind right now. Do you know how much is in there? You sometimes avoid checking it because it makes you feel overwhelmed. Do those numbers scare you? Are you frustrated? Scared? And reflect on your financial wealth. And I want you to see the numbers that you have available for you. All of your finances, all the money that you have, and I want you to see that final number that you have right now. And what I want you to do is imagine a number you'd love to create. That being monthly, daily, by the end of next year. That's the number that you're going to create for yourself next year. Imagine a number that would create more abundance for you, that might allow you to travel, support your family, retire a loved one. Feel what that would mean to you to have that money available to you right now, what that would do for your life. That financial freedom is so powerful. What's the number one thing that you love to do that involves money? How would that make you feel to travel as much as you like, to drive that new car? Just feel that right now, what you're going to do to get towards that next year. Because you are going to get to that next year, I promise you. I want you to hold on to all of these thoughts, your ideal health, your ideal relationship, and what's possible for you next year, your ideal financial results, experiences, and to hold on to those feelings and imagine what it's all going to take to transform those three parts of your lives next year. You're going to be committed to those goals. All will just be another year. One of the most important resources we have in our life is time, and that's something we don't get back. We waste it, it's gone. We're sitting on our deathbed. The thing we want more of is time, so don't waste it. So as we take one more big breath in and through the nose and we hold it, and we exhale slowly through the nose as we open our eyes. We come back with this new focus and determination. We stretch our bodies out, lifting our arms above our heads and stretching and releasing as we come back into the moment. We've got this new focus and determination that we're going to take on to next year, but don't start next year, start now. And the reason why we do this is to create awareness in our lives, where we are right now and where we want to be. Without these types of exercises and these self-evaluations, we're sort of wandering through without a plan. We don't have anything to execute to get us where we want to be or to really get us out of where we are right now. In order to do these new things, we need a plan, and if we don't have a plan, we become frustrated and lost, wandering without a goal or guidance to keep us on track. We need to be able to keep ourselves accountable for what we want to achieve and the reasons why we do it, and then we build a plan around it. All right, guys, I hope you enjoyed that. That's a big one for next year, so don't waste it. If you want to make change, the time is nigh, my friends.
Sick. Fuck,
Alright,
man, I
guys.
almost fall asleep when I do those things.
It's a good one, man. Trust me, it's a good one.
I got one more thing for everyone.
Ah,
Oh, ads, you just ruined the moment, man. Come on.
It's good.
all right.
Right. What is it?
I have received from Profit Trailer that we can offer 50% off until the end of the year.
How come until the end of the year?
I don't know, Christmas, bro.
Fuck, assholes.
The Christmas bonanza. Ads, I mentioned to the guys too that we had a really good chat with Jason and Jared too as well. So we got some pretty exciting stuff to announce in the next little bit from them too.
Yep.
They have a really, really incredible vision for what they want to do with Accutas next year. I'd definitely be keeping your eyes on in the next month. But yeah, just to see the sort of the passion and what they have planned for that program, and you know how much emphasis they're putting on those back testing strategies and all that sort of stuff is pretty incredible. So you know, there's definitely a possibility there if you want to get Profit Trailer very cheap. That's a great product as well. Eric will definitely be working on something with them, but obviously we've got to sort of work by their terms at the moment, because we're the only people that are partnering with them in this sort of Australasian region. So we've just got to work on their terms at the moment. We've been very, very, very lucky to get this from them. So yeah, in the meantime, if you want to jump on Profit Trailer, Adam has done that as well. It's a great program to use too. Obviously the benefit of having the Accutas will be the back testing strategy, but obviously it is in beta at the moment with some new things coming out. But if you want something that's already established with a great video that Adam's already run and the ability to ask lots of questions, 50% off. It's dirt cheap. It's dirt cheap.
Yeah. All right.
See,
All right, guys. Hope you enjoyed that lesson. This is really the beginning for those more advanced stuff now as well. So yeah, definitely brace yourself. We'll be touching base in Discord about what happens for the rest of the year. But yeah, safe to say, let's just enjoy it. Let's get in the Discord, make some money, make some trades, and keep on kicking along.
cool.
All right, guys. Have a great night.
We'll
See
see
you
guys.
later.
See you
Thanks
guys.
very much,
Bye.
Bye.